on shale. P. McGuire, XM.com, Chief Executive, live in our Sydney CBD studio. Peter, warm welcome to the show. One kind of lead indicator on all of this, the will they, won't they, what if, maybe, perhaps, the net longs that we are seeing either building or decreasing, what tale does that tell ahead of State of the Union?
Well, good afternoon, Carson. Look, from a hedge fund perspective, they're piling in. That hasn't changed, and that whole momentum is just building week on week, as is the rig count. We're over 600 now, according to Baker Hughes. We're at about 602. So what's very fascinating is that the US now, we've seen production as far as export, 1 million barrels that they've been exporting more than the first time ever in February of 2017. So, there is so many different players entering the market, and I think that really, when you look at it holistically, with the US moving forward, it's going to be fascinating, moving to, say, mid-year, driving season and so on. So, Carson, I think volatility is here to stay. It's
incredible that you've got the money managers you talk about believing there's going to be an equilibrium at the end of all of that when the dust settles, that somehow OPEC does a delicate dance, that somehow they've, where they previously just made a ham-fisted job of it, and at the same time the US doesn't run well ahead of itself. I mean, that's an extraordinary kind of leap of faith, isn't it?
Well, it is very much a leap of faith, and they're expecting something as far as a breakout. And that's where the money managers are all, net long. They're thinking to themselves, if something does move and it moves violently and you see a $5 or $10 move, these guys are going to be very, very happy traders. They've been long since about 45. So it's not unusual. That OPEC meeting is the best part of 3 months away or less than. And as far as these compliance numbers, what's happening as far as Trump over the next 24 hours? Where does that move? And of course, leading into quite a time traditionally as far as consumption before we get that, those large numbers as far as European and US summer season. So that's where the traders are looking at. They're long on base metals, they're long on gold, they're long on all of the commodities.
Peter, Tony Farnham here from Patterson's. I would have thought if there was going to be any of the major commodities that potentially have excess supply going forward, it would have been oil, wouldn't it? With the shale guys have got a president on board that's promising significant cuts in regulation. That alone makes it cheaper per barrel to produce, surely.
Absolutely, Tony. I mean, when you're looking at what's happening as far as the rigs, we're over 600 now. It's the strongest it's been in the best part of about 18 or 19 months, going back to, the best, I think around about September, October of 2015. So the differential between now versus 2015 as far as production costs, we're now at those early $40 versus probably $45 or $48. So it's coming in, it's easier to produce, more rigs are coming online, and that's really going to greatly impact production moving forward, Tony.
So the next question then is, if oil doesn't take off, indeed if it just nudges just a fraction lower, I'm only talking a couple of dollars, what's going to be the reaction of OPEC? They've got reduced production and they're not getting,
price.
That's right, they're not getting the kicker that they reckon they were going to get from showing production discipline.
Well, that's the issue at hand, and where does Russia play into that? What happens as far as those increasing numbers coming out of the US? All of the mix, and that's the delicate issue. That's the delicate part of the dance. And I think that after you look at July 1, so if that 6 month period ends, July 1 moving forward, Tony, we could very easily see a $50 or $48 handle. That's what traders are very, very mindful of, and that's where a lot of the producers are bulking into their I suppose, worrying thoughts. If we are going to see a price decrease, they're hedging and they're locking in prices now.
What do we think of Bullion? Meanwhile, looking at the note from Macquarie, just doing a sort of a year-on-year comparison, looking at this year's Jan to Feb rally, comparing it on 2016, saying the main difference is it hasn't relied so much on bad news, instead real yields have fallen, as being perhaps the main catalyst for this upside.
Well, I think there's so much uncertainty as far as Trump, what's happening as far as US dollar, Carson, bond yields, and we've seen 1250. Many traders are now, they're stacking onto positions. They're saying 1280, 1300 is very achievable over the next 3 to 4 months. There seems to be that continued uptick, but also that uncertainty as far as a hedge, and I think that's really where a lot of traders and a lot of retail investors are piling into those positions, quite simply because of that risk or uncertainty, what is ahead of us, with Le Pen, with what's happened as far as Holland, and of course the German election. So all of that going into the mix, that uncertainty leads to volatility, and that's why I think you've seen so many of those traders really stack onto positions on bullion.
Peter, isn't the extra concern there on top of the political risk you're talking about, how quickly the Fed moves on rates as well? Because that messes around with surely US dollar fundamentals.
Well, exactly right, Tony. I mean, look, are we going to get 3 rises this year? Are we locking in 2? It's still it's early days in a lot of ways. I mean, as every day rolls forward and there's no definitive stance taken, I think that increases the volatility, and that's where a lot of traders are saying there's too much uncertainty with what's happening with Europe. There's worrying thoughts as far as where does Trump play as far as tariffs moving forward, the Mexicos, Canada, and all of these participants. That really creates uncertainty, and that's the mix, and that's why people are looking at it.
Pete, good to talk. Thank you as always.
Thank you, Carson.
All right, Pete McGuire from XM.com there, Chief Executive.